I began with State Farm in 1979 in Wisconsin, and I moved to West Virginia, and I continued with State Farm. And there, our family had a significant loss, and State Farm was incredibly faithful and supportive during that significant loss. We moved from West Virginia to Oklahoma. I stayed, and I made it to Oklahoma 3 different times for a total of 15 years. And each time I signed up and continued with State Farm. I got to Arizona 30 years ago, and I stayed with State Farm, transferred. You know what they did? They made me fill out a brand new application. And I was steaming because I had been such a loyal customer for so long. But State Farm in Arizona has its own way of doing things. And so I filled out the application and have been with State Farm ever since. So it's been a pleasure to work with Karen Reinhold Cole. It was hard for me to get that right this morning. Karen has been most supportive in so many different ways. I have had a couple fender benders here, but fortunately they were not on State Farm's tab. They were on the tab for another insurance company, and I'm grateful. But Karen provides inclusive and comprehensive support. And the thing that makes Karen so valuable is her door is always open for her customers. And she's got a great troupe who will work to answer all your questions. But if you really want to see Karen, you just say, I'm here to talk to Karen, and she will welcome you in. Karen hails from Hershey, Pennsylvania, and in Middleton, Pennsylvania, where she was a State Farm agent for 12 years. Now, I'm not going to tell you how long, well, no, I will tell you, she's been in Arizona since 1997. So let's give a warm welcome to Karen, who's going to offer some insights about all the changes taking place in insurance. Thanks, Karen.
Thanks so much. Thank you, everybody, for coming. I usually only hold the microphone when I'm singing karaoke, so if I look a little off, every Thursday, very faithful. We always clap vociferously when people are done, sometimes because it's great, sometimes because it's over, it doesn't matter, we're still supportive. So anyway, I appreciate it. Okay, so you got the handouts, and if you didn't, they are on the table. I've been an agent with State Farm for 40 years. August 1st will be 41. And no, I'm never retiring. People ask me that, and I'm like, yeah, no, 10, 15, 20 years, I don't know. They'll carry me out in a box, I think. But I think I'm kind of a cross between a teacher and a social worker. I really believe in giving back to the community, and I have been doing a lot of this kind of presentation because I think it's super important. So if you guys have questions, I guess I'm going to speak first and then take questions, but honestly, I don't mind being interrupted, so I think after all this time, I should be able to answer under sodium pentothal, right? So thank you so much, Gary, for inviting me. I'm very happy that I could come. Gary asked me to address certain specific issues, so I'll make sure that I do that, and then again, I'll answer any questions that anybody has after. And if I have time and you're interested, I can share how my husband and I were almost arrested at the Vatican a year ago, but that's a separate story. Okay, so Gary asked, what's the difference between buying online and having what I call a real agent? I think for a long time people didn't think there was a difference, or you've been kind of advertised into thinking there isn't, but there really is. During COVID, a lot of people felt like they were pushed to do everything online. You know, I'm kind of old school. When I came in, she said, do you have any, I'm like, no, I'm old school. I'm just going to talk and share information, answer questions. So sometimes people think insurance is cheaper online than through a real agent, which is categorically false. You do not necessarily pay more to have a good agent. Right now, I don't know what State Farm's doing. I mean, they're practically giving it away. We wrote a gentleman yesterday, we saved him $2,400 with better coverage. This happens literally every day. It's not small amounts of money. And you have real people to talk to when there's a problem. I talked to one of the people at my referral group this morning. He's like, I've got to get you my insurance stuff over. He's with another carrier, and he can't get anybody to answer the phone. He can't get any information. They want you to do everything online, but sometimes you need a real human being. And so with us, you'll always get a real human being. There are 4 of us in the office. We are full-time, fully licensed, and all of us are in the office. So none of this remote jazz that I personally detest. To say if the bubonic plague comes back, I will be in the office every day. So we are the largest insurance company in the Western Hemisphere. Sometimes people don't know that because it's sort of like a franchise, not technically, but we each own our own offices, we employ our own people, and so forth. So sometimes people think we're like the little neighborhood insurance company, but in fact, we're enormous. And we are not owned by stockholders, we are a mutual company. And that is why we can do things like we just did a massive rate increase for auto insurance November 1st. Any of you who are with us have probably seen that. I had somebody email me the other day and said, not that I'm complaining, but my bill went down $20 a month. And I'm like, that's because of the rate increase. Basically you have trained people that you can call when you have a question. If you come in the office, it's nice if you make an appointment because then I make sure I'm there in case I'm not, out doing something like this. But pretty much I'll drop what I'm doing and talk to you if I can. Especially, people just have issues. Someone's sick, they lost somebody, whatever. There's a lot in this world that happens. And sometimes you just want to talk to a human being. So the other thing is, it isn't always worth your making a claim. So if something happens, and I know for sure it's not going to be a covered claim, I would rather that I told you than that you made the claim and then it's on your record and we can't get it off. So many carriers, you call a toll-free number when you think you have a claim or even to ask a question. They will, like I had one client and she called her carrier and said, if I spill coffee on my laptop, is it covered? They said no, entered it as a claim, showed it 0 paid. Then 6 months later, she called and said, if I have termites, is that covered? Again, they said no, but instead of just saying no, because they file it as a claim, and now she's got 2 claims on her record. And there's no way for your carrier, when you're trying to change insurance, to know if it was under your deductible, if it wasn't covered. We don't get that kind of detail. So, for me, if something's going to be on my record, somebody better be writing a big fat check. I don't, and I want to know that ahead of time. If my house is on fire at 3 a.m., you can bet I'm calling in that claim. If I back into my neighbor's mailbox, I'm writing that check. Personally, I don't want that. In the old days, this is something a lot of people don't know. So this is about auto insurance, and it is important to anybody who lives in Arizona, but seems to be a well-kept secret. So in the old days, we were a non-cancellation state. That meant no matter how many accidents somebody had, unless it was a big and bad like DUI, vehicular homicide, that type of thing, we could not cancel them. And that means that all the people who are not having accidents are paying extra because that's way outside the normal realm of what usually happens. And certain things did not count, like glass loss, rental car coverage, road service. You could have 1 million of those claims and it made no difference, okay? In 2017, the Department of Insurance completely changed the way that works in Arizona. It's not a State Farm change, it's an Arizona Department of Insurance change. And now everything counts. So I call it insurance soup. You sort of put all the information in and it spits out whatever it is, right? So again, we don't want you to have anything negative if it's not going to be a big payout. We do in our office, they don't do it for everybody, but we have 3 companies that will do the chip repairs in your windshields for free for our clients. So you just call them and say, I'm Karen Cole's client, they will do those for free, and that keeps it off of your record. So that's a good thing to have. Anyway, but it's important to know how that changed because most people don't know and they've been used to maybe making a lot of claims that didn't count in the past and now it comes back to bite them. So I personally always say I really hate surprises. I don't even like sparkly and velvet boxes surprises. I don't like any surprises at all. So I really want to be informed about how things might impact me, not just now, but down the road. And that's the kind of information we give you. Now you're right. If your claim is $4 over your deductible, it is your right to claim it, and we're not trying to talk you out of it. We just want you to know if that's going to come back and impact you in some other way down the road. We want you to be informed so that you can make an informed decision. Fair enough? Okay. And we can also help you know, if it is a maintenance thing or if it is an actual claim. The two magic words in insurance are sudden and accidental, okay? Your pipe bursts and it floods your house. Your tub overflows. We have a microburst and it whips your roof off. All these things are sudden and accidental. If your shingled roof is 30 years old and should have been replaced 5 or 10 years ago and now is leaking, we'll still pay for the resulting water damage, but the roof itself is not. That's a maintenance item. I just re-roofed my own house. Yes, I paid for it. There are just some things like that that are, we're expected to take care of as homeowners and auto owners and stuff, okay? Be very careful. Oh, I was going to say too. So during the claims process, what we always tell people, if you call in a claim or tomorrow and you're like, this happened, whatever, and it's something that definitely has to go to the claims office, what we'll always say is, we are not, claims kind of does their thing, we do ours, we keep in our own lanes unless you need us. So if for any reason there's an issue, they say something that doesn't make sense, you don't understand how this works, or they mentioned a salvage title and sometimes like when you go to a doctor and they tell you something that kind of makes sense at the time and in the parking lot you're like, what the heck did they say, and I don't understand that. So we're here to act as your liaison. If you need help, if you need us to make calls, if you need us to upload documents, we are very happy to do that for you, okay? Be careful when you're looking at quotes or your policies, because there's a lot of difference now, and in order for some companies to stay competitive, they have, I call it, carved out the guts of the policy. So the home amount might be the same, but they have taken away a lot of your contents coverage. You have very low liability limits, that sort of thing. So we always want to compare apples for apples. Our goal always is to give you better coverage at a much better price. And of course, I can't control the price, State Farm does that, but it's just been astonishing. I mean, we're not talking a little bit of money, it's like thousands per year. So it's good. And just watch, because other companies sometimes will say that they've matched our coverage, but they don't. We had a client we wrote about a year or so ago, and she, we quoted her, and then she called back, we followed up, and she said, oh, I went with this other company, they were cheaper. And I said, okay, if that really is the case, I'd be happy to look at what they gave you to really tell you if that's what happened. But anyway, so thank goodness, about 4 months later, she starts reading her policy, and she comes back in the office and says, Karen. So what they did, and they're like a block from my office, I know these people very well, I've known the agent for a long time. In order to beat our rates, in quotes, they gave her, instead of a $500 deductible on her comp and collision on her vehicle, they gave her $2,500. But it gets better. On the homeowners, they gave her a $26,000 deductible. She's like, Karen, I'm on Social Security. There is zero possibility I could ever come up with that kind of money. So in effect, she had no insurance. Thank goodness she caught it. She actually read, and she caught it before anything happened. And obviously now she's with us and she's happy. So just be careful about that. And we will always be honest with you. If you have us look at something, I tell people, if you're getting some fabulous deal that nobody on the planet can possibly imagine, we'll be the first to tell you. Probably about 99 times out of 100, it's not true. But we will still look at it for you. And we always say we treat our clients like family. So, we are giving you the same advice we'd give if you were a cousin or an aunt or a sister or somebody. Okay? Things to be aware of when we talked about the sudden and accidental. This is something that a lot of people don't know. So a shingled roof in Arizona will last roughly 20 years, maybe 20 and a couple, mine was 21. A tiled roof will last quite a bit longer, but what doesn't last is the underlayment. So even if your tile roof is going to last 50 years, you're still probably going to have to replace that underlayment after about 20 to 25 years. So just be aware of that. Reputable roofer, or some better ones than others, but they can look at it for you, and we can refer you people if you want to. Gary also asked me to address the large variations in rates, because they can vary significantly. We just have another client who we wrote from another carrier, and once the policies were issued, she made an appointment, she came in with me, and she had theirs and she had ours, and she's like, how can you do this? How can you give us better coverage for less money? And I said, I don't control the rates. If I had a magic wand only, but I don't. But anyway, you know, everybody has to file their rates through the Department of Insurance. And if we ask for a rate increase, interestingly enough, even a rate decrease, they have to approve. I think that's insane, but you know, but we have to prove like why we need what we need and why we're charging what we're charging. The thing is, when you're the largest insurance company in the Western Hemisphere and you have 96 million policies, it's sort of the Costco philosophy, you know. If we need a rate increase, if we need money for whatever, you know, we can increase a little bit on 96 million policies and you got a bucket of money. Unfortunately, the small companies do not have the bandwidth, and we have seen, especially with homeowners recently, and I don't know if you guys have seen this, but I've seen companies even double and triple the rates that they're charging. So, you know, it just depends on how well they're funded and what, you know, State Farm's very conservative. We take 50 cents of every dollar in premium we put in the policyholder protection fund, and that's to pay claims. So most companies don't do that. And, you know, not to say we'll never raise our rates, we absolutely will at some point if needed, but at the moment that hasn't been happening. Yes, Gary?
Here, talk about the rate increases around fire vulnerability and wildfire insurance and all that.
Okay, sure. So Arizona, I mean, technically all of Arizona is a wildfire zone. For insurance purposes, there are 3 ways that an address can be rated. And you're welcome to call or text or email. And I have realtors who do this all the time. If they're listing properties, they'll send me a list and say, you know, who's in the wildfire zone and who isn't. So there are 3 possibilities. First one is wildfire zone ineligible. And that means not for love or money can I write it if it doesn't meet the requirements. It's done by latitude and longitude, so it's kind of like flood insurance, where you could have 2 people next to each other, but one's up on a little bit of a hill. The one next to it needs flood insurance, the hill house does not. So it's just, you know, like I said, we do it by the address. If it's not insurable for us, it doesn't mean you absolutely would not be able to find another carrier to do it. But I do a lot of these with real estate companies, and the last one I did, they said they had an agent who had a house in a wildfire zone. They had to go through 27 companies to find somebody who could insure them. So, you know, it's kind of like trying to get a mortgage with great credit versus crummy credit. It's a similar thing. There are some things that you can do, you know, clean the brush around your home and that sort of thing, have defensible space and all that. Have you guys heard of the Lahaina house, the Miracle House in Lahaina, Hawaii? A couple of years ago, I brought visual aids. A couple of years ago, this house, when they had those horrible fires, I can pass this around, but when they had those horrible fires in Lahaina, I mean, the fire was going 65 miles an hour. You can't drive anywhere on that island. We were married in Maui. You can't. But they had just, look on the back too. Yeah. So there's one picture, more of the house. But anyway, they had just like completely cleaned all the brush and everything from around the house. They had put 5 feet of river rock all the way around the perimeter of the home. The house was made of California redwood, which I learned in the last couple of years. It has natural fire retardant properties, so it doesn't burn as easily. Didn't know that. And they had just put a commercial grade standing seam metal roof, which those will not burn. Shingled roof, you can get an ember from a mile away and it can burn, but not with the metal. And so they had just done that. So there was no fuel for the fire, right? They had the ocean in front, and they had cleaned everything out, and they had the perimeter of the river rock, and the fire came right up to the house, and there was nothing to burn. It just went around it, and everything else looks like a war zone, which is so sad. But this house was spared, and they do call it the Miracle House. You can Google it. So anyway, so the second category for us is wildfire needs a survey. So in the survey, and we can bind those, it doesn't mean they'll necessarily approve them, but we can bind them. So they're looking for that stuff. Is there defensible space? Are there trees hanging over your house? I have 20-year-old, probably 21 because it's a house age, and you know, I am like a maniac keeping those trees off my house. I don't, you know, I want those. So it's a lot of stuff. You know, people used to store firewood on their deck, and that's not a good idea because, and especially if the deck is cantilevered out and the fire comes up, it goes right under the deck, catches it all on fire, then it's got all this nice kindling because you've got your winter supply of firewood there. Not a good idea. So it's kind of common sense, and the thing is, The firefighters are not going to endanger their personnel and their equipment by trying to fight a fire where they don't have a good chance of success. Those fire trucks are over $1 million a piece, not to even mention obviously the value of their firefighters. So, you know, when you go up to Flagstaff and on the left-hand side in the canyon are all those beautiful houses that you have to cross a river to get to, and they are lovely. We will not insure those because the fire department cannot get there, and if your house starts burning, it burns. They're not going to cross a river to get there because it endangers them, their people and their equipment. So they have to be able to get in and turn around and get out. So, you know, you want to make sure your addresses are very clearly marked, obviously for ambulance and that sort of thing as well. At the beginning of your driveway, keep things trimmed back, you know, that sort of thing. Because, you know, we're not a nonprofit, right? We're not the government. We can't put money in the basement and make somebody else pay for it. You know, we have to be financially solvent, and we can't do that if we're, you know, taking on an awful lot of risk. So we're careful about what we write, and it has changed drastically, even in the past year. I've never seen anything like it, but 4 out of 5 wildfires, and wildfire is the biggest cause of destruction in our country, and probably others, 4 out of 5 are actually human caused, which is really sad, because I mean, we know it can be caused by lightning and stuff, but the human cause. And you know, we all remember those huge LA fires, Palisades and such. Before any of that happened, and then prior to that, remember they had the hurricanes in Florida, and they had hurricanes and wildfires in North Carolina. So prior to all of that, 1 year prior to that, catastrophic home losses doubled in 1 year's time. And I've never seen that in 40 years of doing this. So there's a lot of stuff happening. And you know, you just want to be as careful as you can. You want to try to avoid the risks. And you know, if there's a wildfire that actually spreads through a big area, the firefighters will not defend the houses that are just dangerous. So if they're all overgrown and, you know, and we all like our trees and all that kind of stuff, I do too, but just keep them back from the house so that it's not such a hazard, okay? And then the third category for us is no concerns. So we love it when we get those. But the areas are, it's interesting, my husband lives in Flagstaff, and in his neighborhood, he's fine. But I tried to write a client on the border of Forest Service, couldn't write her. So we don't know. It's not by neighborhood or anything. In other words, it's just address. Did that answer your question? All right, so I talked about sudden and accidental. I talked about the big rate differences. Okay. I think that's pretty much what I've said, unless you guys have questions, which I'm very happy to answer. Do we have them? Yes, ma'am.
Yeah, do you have a manufactured home?
We do. So the tricky part about manufactured homes is if they were built prior to 1976, we cannot write them. Yeah. After 76, there's 2 ways they can be written. So with State Farm, we cannot write replacement cost coverage on the building itself if it's more than 10 years old. We can write replacement cost on the contents and all that. Now, for years, I've always referred those out because there were companies who would give you replacement cost on the building itself. But what we're finding recently is some companies who used to insure them and give you replacement, they'll still insure them, and they won't tell you, but there is no replacement cost coverage on the building. I'm always happy to look at your policy and explain it for you if you would like. And then the more recent thing is, for us, like if we insure it when it's less than 10 years old, you have replacement costs forever, unless you tell us to take it off, which I would vehemently object to. You know, you've got it forever. But now we're finding other carriers are taking it off once the building turns 10 years old. So that's scary too. It's really important to review periodically, you know, if you can. Because you know, the thing is you can't know what you don't know. I don't expect you guys to know all the stuff I know, but I do want you to understand well enough what you've got, what you're paying for, why, you know, what your options are. Anytime we write somebody new, whether from another carrier or another State Farm agent, if they transfer, we always do a review. We want to start with a clean slate because we hate surprises. I hate surprises. I don't know if my team does, but I definitely do. Does that help? Yeah. So you want to make sure you have replacement cost on your contents. Check your liability limits. It is very inexpensive to sorry, your lipstick on the microphone. It's very inexpensive to even double or triple your liability. And, also people will sometimes carry very poor coverage because they don't know. They get online and they're like, oh, this is the cheapest, let's do that. But they don't realize how exposed they are until they have a loss, and it's like, well, what do you mean? So what I find is I always explain it to you. You guys you've lived a few years without me, you'll probably make it a few years more, but you know what I mean? It's not my job to tell you what to do, but it is my job to give you options and explain things and educate you so that you can make informed decisions. Makes sense? All right.
There's a hand over there, I think.
Any other questions? I've dazzled you so much you don't know what to ask? Go
My
ahead.
insurance company is no longer offering replacement cost on homeowners insurance.
On regular homes?
That is correct.
Golly. Yeah.
They are offering an extended, you can purchase an extended, but they are no longer offering the replacement cost. Is that true?
So I think that I want to clarify the terms. So there once upon a time, even in Arizona with us, was a guaranteed replacement cost policy. So basically, as long as you insured it correctly, and we would, inflation would up that a little bit each year, we guaranteed replacement costs. We have not done that for a very long time. I am going to blame California because you just know that somebody's like, well, my house was worth $150,000 when I bought it. Now it's worth $6 million, and again, the premiums weren't set up for that. So, but you definitely want to have both replacement costs on your personal property and your building. And, it costs you nothing to have me review. You can have me review it with you, and you can be like, Karen, I don't care. I just love this person I'm with, and I don't want to leave, even if you can give me something better for cheaper. It's okay. It's your choice. I'm happy to do it because, you can't know. And people don't look at that stuff very often. We really encourage you to sit down with your agent about every year or two because things change. People marry and divorce and have babies and lose people and all kinds of stuff. And, your needs change over those times. Oh, another thing, check your beneficiaries on your life insurance and like all of your pension plans and all that stuff. My darling husband, who I married 6 years ago, when I told him to do this, he's a physicist, he's a physics professor up at NAU, and, he has a good bit of money in his retirement plan. And, of course, he hadn't looked at it because his brain is in a galaxy far, far away. He's brilliant, he really is, but he's not mired by, everyday stuff. And turned out that he had his ex-wife still as his beneficiary on a lot of money, whom he had been divorced from for 15 years, and he was with somebody else in the meantime. He wasn't married to, but still, he was with, and I'm like, oh my gosh. And that first wife, as for most of us with our first one, it was a cantankerous, not happy split. So, she would have kept it. Let's just put it that way. So double check on that.
So,
Okay. Ohio State was next, and even though I'm a U of M grad, I'm still going to take your question.
You offer umbrella policy.
Absolutely. So an umbrella policy, for anybody who's not sure about it, is an excess liability policy. So let's say you have a car accident and somebody's maimed or killed or whatever. Once your underlying policy pays and they're still suing you for more money, that's when that umbrella will pick up. I always recommend having an umbrella equal to your assets. If your assets are $5 million, you probably should have a $5 million umbrella, and so on. Because you want to protect what you're exposed for. Does that make sense? Did that answer your question?
Yeah.
Okay. Yes, sir.
Another question, if you have a replacement cost on your policy
Mm-hmm.
and you have a total loss and your circumstances change, can you take the value?
You
Or
can,
have to
and claims people work that out, thankfully, that's not my part of the business, but yes. So sometimes people, their house burned to the ground and they don't want to live here anymore. They need to be near their children or something, or they need a smaller house. You also can rebuild and make some changes within, like, move walls, add an extra bathroom, that kind of stuff, so absolutely, you can do that. I mean, we're gonna pay what we owe one way or the other, so it's your money to do that kind of stuff.
Follow up on when you do replacement cost.
Mm-hmm.
Now, in Michigan, where we're from, you have to rebuild the structure like it was for the replacement.
No,
If you
so,
want to change anything, then you pay any extra costs on it.
well, you not necessarily pay an extra cost, it depends. We owe you the money that it costs to replace what you had. if you take that money and make your house bigger, smaller, add whatever, that you can do that.
But you do have a set limit for the cost.
Well, we're gonna pay what the replacement cost was for what you lost, right? So it's kind of the opposite of a way, I'll get there in 1 second. With a car, when that's a total loss, you know, you don't get enough to go buy a brand new one when you lost a 10-year-old car. We're gonna replace that year, make, model, and goodies, and we're gonna give you a check for that amount. Now, you're probably not gonna try to buy the exact same vehicle, you're probably gonna buy something new or whatever. But yeah, on a home, we're gonna replace what you've lost. Does that make sense? Okay, yes.
Want to know what the cost is
The cost for
to replace
furniture.
furniture.
I'm sorry. I'm not-
Furniture.
Furniture?
Furniture.
So well, my podium is moving, sorry. So we're gonna replace whatever you lost. So if you have, you know, you've got a living room set with a couch and 2 chairs and a coffee table, we're gonna give you enough to buy brand new, something comparable, a couch to, you know, okay? If you have old things, I mean, I have some old stuff, but honestly, like I have a beautiful dresser that was my grandmother's, but she's gone a long time and I love her, but if that burned, I don't want somebody else's grandmother's dresser, so, you know, I would probably buy something new, but does that answer your question?
Yes.
Okay, well, you guys are letting me off way too easy. No?
Yeah.
Yes, sir.
On your policies, aren't they set up with a structured dwelling and then contents and there are numbers in there?
Yes. So for us, the contents is 75% of the dwelling amount, always. Some companies it's only 50, and it doesn't mean that you necessarily have to have that much in contents. I have not in my career ever seen a loss where somebody didn't have enough coverage. I mean, that's usually quite generous, but it is different from carrier to carrier.
And you have to itemize special items like a mink coat, for example, or jewelry or whatever.
And my mommy's mink coat.
Yeah.
Not that I'd ever wear it here, I don't know, in Flagstaff once in a while. But, so the thing is, if you have, depends on the size of your loss, basically we wanna know what you had, and we wanna replace what you had, right? So we're gonna give you a list and be like, basically just tell us, you know, what you had, and pretty much we believe you. The only time I've ever had that questioned, I lived in Pennsylvania and I had a client who lived in a pretty old single manufactured home. And she had a fire and she had a really expensive coat. I can't remember if it was a mink, but it was a really expensive coat. And claims called me and said, you know, does this seem, I mean, it's just kind of out of her normal way of living. Do you think that this is okay? Well, her son was a hairdresser to very famous people. Now, I don't know why he didn't buy her a house, but he did buy her an expensive coat. And as soon as I explained it, it was no issue. So we basically believe you had what you said you had. I think it's a super good idea to, you know, videotape or take pictures or something, because honestly, I mean, I'm in my office every day about 8 or 10 hours, and if I had to close my eyes and tell you every single thing on the wall in the there's no way. So it's a good idea. And obviously, I shouldn't have to say it, but do not keep it in your house. I had somebody one time and she's like, oh yeah, I took pictures, I did, you know, all this kind of stuff. And it burned in the fire. So, you know, trade with a friend or something so that if you are safe deposit box, wherever you put stuff. Yeah, Gary.
So, what about expensive paintings? You know, Sedona's a place of artwork.
It is, and unless you have something, so you can do what's called a personal articles policy. That's a separate policy for things that are really just way beyond the scope of what a homeowner's normally does. I have one of those for jewelry because I love jewelry and I have a lot of it. And I don't insure by any means all of it, just the real expensive pieces. Most of it I probably never replace anyway. But with paintings, if you have something that's $5,000 or $10,000, as long as you have enough contents coverage, it's not going to be an issue. If you have an original Picasso, you want to have that insured separately. And if you read our home policies, it'll say replacement cost on the building, and it'll say limited replacement cost on contents. And I always want to explain that because I'd be like, morning, Will Robinson, what the heck does that mean, right? And it's just for those kind of things. So for most of our average stuff, we're going to give you enough money to replace it, even if it's a fairly expensive thing, as long as you got enough contents coverage, as most people do. But if you have, did you ever watch Antique Roadshow? Are you familiar with that show? Okay, I love that show. But I think I'm an idiot because the stuff I would have paid too much money for is never worth it, and the stuff I would have thrown in the trash would have been some priceless antique, right? So if you and I both have a folding oak chair and we take it out at Antique Roadshow and they look at it, they look at mine and say, oh, Karen, yours is a lovely reproduction, it's worth $400. Should I pay $5? But they look at yours and be like, okay, Barb, yours, if you turn this upside down and you look at this little smudge, now all of us are over 40 and we can't see that thing, we thought it was dirt. Yours came over on the Titanic. If you have something like that and you want the value for it and not just to be able to replace it with something new that looks like that, have it insured, appraised, and insured separately. But for the most part, I've had very few people, I mean, people will insure things like camera equipment, musical instruments, drones, you can insure all kinds of things on those policies. But I've only ever had one client who had lots. I mean, it was a very wealthy family. They inherited a lot of stuff from their parents, and they had major, major stuff, and they appraised it all and insured it separately. But for most normal people, I'm assuming they're normal, I don't know. But for most average people, we don't tend to have that kind of stuff. But like I said, $5,000 or $10,000 for a painting. You know, sometimes people have like Hopi baskets, and you know they can be some money, but unless it's pretty extreme, you really don't need to pay for the additional policy. Rugs too, people can do rugs on those, pretty much anything. Yes, ma'am.
Well, we've got a cottage in Wisconsin, and we have a boat, and we have a car van we leave up there.
Mm-hmm.
But we've always had trouble because it's out of state, so we can't let our local insurance company do it. So we do online insurance just because it's out of state.
Yeah.
Is that usual for companies if they
So,
do out of state items?
You want to have things insured where they live, basically. I mean, if you have vehicles and you're going back and forth, you can insure them wherever you're claiming your main domicile is. But for me, I mean, State Farm is in all 50 states. So if somebody, one of my clients here was like, hey, I also have this stuff in another state, I will refer them to a State Farm agent. So, and then you do get some like multi-policy discounts and stuff. Like our home and auto discount, it's 15% off the autos, it's 35% off the home. It is crazy. I've never seen anybody give that big of a discount. It often will pay for the car insurance, or at least a good hunk of it. So, so yeah, I would. It's just if you have a hard time like getting a question answered or making a payment or anything like that with the online people. This gentleman told me this morning at my group when he's trying to get a hold of his carrier, he's like, they're really good at taking your money. But boy, when you have a question or need documents or anything like that, and for us, we can print ID cards in our office. We can snail mail them, we can email them, we can fax them, text. We haven't had a fax in about 15 years, but I know every once in a while some people are like, oh, you have to fax that in. I'm like, no, I can't. So anyway, does that help?
Yeah.
It's nice to have things together also. And the other thing people don't think about, but let's say you have a travel trailer and you've got it all loaded for bear and you're going to see all the national parks, something like that, right? And someone steals it in the driveway the night before your trip. Your travel trailer is covered under its own policy, but all the stuff, all your contents and all that stuff, that's covered under your home. So one other thing with homes, if people have land, State Farm actually does extend liability coverage for up to 500 acres of unimproved land anywhere in the country. So, you've got the family farm up in Idaho or wherever. We do extend that, and it's free of charge. Okay. Anybody else? You guys are good. You're asking good questions.
Over here.
Yes, sir.
So you talked about replacement costs,
Mm-hmm.
and that keeps going up all the time. How is that figured? Do you figure
The values
that
keep
every
going-
year, or is that up to the homeowner?
Good question. Yeah.
Do I have to find a contractor to tell me what the
Yeah.
square footage cost of building something is?
Okay, good question. Really good. So we have a replacement cost calculator. It's a computer program. Thank goodness I don't have to figure it out. And we have that in our system. I will tell you, especially for West Sedona, it is woefully under. We are insure and also know a number of contractors, and so we're pretty in touch with the average cost per square foot is in the various areas. And it's crazy to me that I just went to a real estate meeting and they were talking about, what they were selling the houses for and all that stuff, which of course isn't just the cost of the house, but it is shocking how much more West Sedona is than the village. I did not know that recently. I mean, I know when I first moved here that was the case, but the village is so cool. It's got all this stuff and everything. I'm like, yeah, whatever. And then you go to like Hot Winter Camp Verde, and you can't tell me that it costs that much less. Does it really cost half as much to build a house in Cottonwood as it does? I mean, it's crazy. But we always want to make sure that you are properly covered. We don't want you, it's like Goldilocks. We don't want you, too much, too little. We want you just right. And we also have an endorsement, State Farm does. I have not seen this with another carrier. Your typical amount is you get a 20% cushion. So you have your house for $1 million, it's automatically insured for $1.2 million. But you can add an endorsement for $3 a month, practically free, that will give you a 50% cushion. So of course, as soon as that came out about 2 years ago, I took it, and we always recommend it. We just got some policies from another agent who retired, and I am shocked at, like, nobody has any of the endorsements. And I'm like, so you have to not be offering them, and again, we're gonna always offer. You can say no, or you can say I want this one and that one, and whatever. We're not gonna pressure you to take them. But yeah, it's just, it shouldn't be a surprise. And then you have inflation coverage where it will be adjusted for inflation every year. And when your building goes up, because remember your contents are 75% of the dwelling amount with us, when your building goes up, that means the contents automatically go up. But still a good idea to, adjust. I mean, if you guys have I gutted and remodeled a house 6 years ago, and for the cost when I bought that house, my builder who owns my building that I rent for the office, he said he could do me a custom house for like $215 a square foot. And he's like, 10-foot ceilings, granite counters. This was only 6 years ago. And I don't think he could touch it for $450 now, minimum. You know what I mean? So those things do change, and sometimes people do update stuff and they don't let us know. So just kind of keep us posted. You can fax, not fax, good Lord. You can text, you can email, you can call, and we're always happy to look at that for you and help you.
Can you talk about how you decide co-insurance versus replacement?
You see,
when does somebody,
okay.
when you get somebody and say, you don't have enough insurance, therefore you're co-insuring this house.
Yeah, you really don't want to do that.
Explain what that
That is lots of money out of pocket. And we will never do it willingly. So if you don't insure properly, like once in a while you'll get somebody who just does not want to pay the premium, and they're like, I know the replacement cost is $700,000. I only want to insure for $3 million. I would send them down the road because I won't do that. I wouldn't do it to a family member. But if you do, then you don't get that extra cushion at all, and you can get like commonly available materials instead of replacement cost. We used to see that when I lived in Pennsylvania, in Harrisburg. They had, these old historic houses who honestly, I remember my attorney's office, underneath his stairs was prettier than anything I had in my entire house, right? It's all hand carved, beautiful. But they bought these houses very inexpensively because they were old and, whatever. So sometimes they would do that, and it's modified replacement cost. And so they pay, $40,000 and the replacement was $200,000, for example. This was a long time ago. And then you get commonly available materials, so you're not getting any of the fancy stuff that you have. To me, I just don't see the purpose of insuring something if you're not going to insure it properly. So we do not recommend that ever. It's just better to be, and it's not that much of a difference in money. And I mean, it's not my money, but for my money, I do all of it. So you'd probably worry about me if I didn't, huh?
The term co-insurance was used. Can you define that?
Yeah, you find that more in commercial stuff, honestly, but co-insurance basically means you're taking part of that loss yourself. So, if you're not covering enough, then when you have a loss, you're out of pocket a bunch. Yeah, I would never recommend that, honestly. Yes. Yes,
When's your first
the
appointment
eager student
available
in
for
the back.
review?
You can come in tomorrow if you'd like. I will actually be in the office today. Yeah, we got some business from a retired agent, as they said, and we have been all over that reviewing because like I said, don't like surprises. You know, you're happy to keep whatever you have. We're not trying to get you to change it, but you know, we know that we did our due diligence and we sent on review. But yeah, we'll do it anytime. Just make an appointment and yeah, the appointments are good because we make sure that we're available. Sometimes people just want to come in and plop, and that's okay. Really, we have the best clients. We do. You know, people are always like, "Are you going to retire?" I'm like, "Why? Why would I? I love what I do. I have the nicest clients on the planet. I'm in a beautiful air-conditioned office. I'm paid well to dress up pretty and talk to nice people. Like it's not a bad gig. Now, if I won 86 million in the lottery, I might not be there tomorrow, but I would share with my team, not equally, but Michelle, my almost 17-year-old office or 17-year office manager, she's like, "You're nicer than me. I wouldn't share at all." I'm like, okay. No, she's awesome. Go ahead.
You know, with all the disasters, with the climate change and that, I have a sister in Florida, and she has a condo, and their rates have increased immensely, not for her interior, but the condo-plex is paying a lot more. And how do we predict, you know, I assume that I have a daughter in California that they've had fires, and they say they're just not insuring them. Is that going to be happening to people, or can that be happening to us? It
definitely can. I haven't seen it here yet, but it definitely can. Again, you know, insurance companies are not nonprofit. We're not.
Right.
We have to be, and we have to be fiscally responsible. So I'll give you an example. So you've heard me rag on California, and I'm sorry if you love California. It's a beautiful place. One of my dearest friends lives there. I would never. But they're very unfriendly to insurance companies. They passed a law about 30 years ago, that said no matter how much the cost increase, you can never increase the insurance rates more than 6.5% per year. California, right? So you can't, not only can you not make any money, you can't stay there without losing money. And then everybody else has to pay for it, right? So, and they don't even look at a rate request for 1 to 3 years. So by the time they get around to it, you're already way behind the 8 ball. So we actually have not written any new homeowners in California for 3 years. It'll be 3 years next month. We branched them off into their own little company because they're causing too much trouble for the rest of the country. However, we still insure over 98% of everybody we ever insured there. So if you have insurance, you know, we're not canceling. The small companies, like we talked before, they just don't have the bandwidth and they can't. A lot of them have just pulled out altogether. And that's sad because they send letters to everybody, be like, sorry, you know, you're without insurance on such and such a date. We have not seen that in Arizona. Doesn't mean that we couldn't, because, you know, I don't have a crystal ball. We don't have the big, I mean, the wildfires are probably the worst in wind, I would say, but we don't really have a lot of flooding. We don't have hurricanes. We don't have any of that kind of stuff, for which I'm very grateful. But yeah, I have a friend who lives in a condo in Florida, and it's not, be careful if you have a condo. I actually have one in Scottsdale, but the thing to watch about the condos is something called loss assessments. So you pay your HOA fee and, you know, everything's going along great. And then they have some, whatever the loss is. My condo in Scottsdale, they've really raised the rates because they had a bunch of trees that died. It was just too hot. And they had to pull them out and put in fake grass and whatever. So, but I was talking to a client in Sedona, and I don't know what they did at that place. It's not that old. They assessed each individual unit owner $57,000, and they had to pay it. And I'm like, ugh. So, and the worst part is she had no loss assessments coverage on her policy. So when we write a condo policy, I always give at least 20, we can go up to 50 if somebody needs it, but I always give at least $25,000 of loss assessments to cover. I've never heard of an assessment that high. Even my friend in Florida got assessed like $6,000, but $57,000, holy cow. But her policy had none. It was a condo policy. I looked at it. Zero. They ended up paying that out of pocket. And it would have been like $8 or $9 a year to add it. So maybe her company just didn't offer it. I don't know. But it wasn't on there.
What's that called?
It's called loss assessments. So how that works is if let's say a microburst comes through And I used to live in Del Webb and Cottonwood, and they have this gorgeous clubhouse, and they have the park, and they have all that kind of stuff. So a microburst comes through, wipes it all out. The HOA can assess individual unit owners for their portion of that loss. So depending on how many people are in the neighborhood and all that kind of stuff. It does not happen often, but when it does, it's devastating. And you can get the loss assessments on your home as well. We always write it if somebody has an HOA. If you don't have it, then save your $8, but if you have it, you need to.
So that's on their regular home, interior insurance, it's called a loss assessment, that they can add that.
Our interior insurance is the condo unit owners, is that what you're referring to?
Okay, so, like my sister has a condo and she pays insurance for her interior and takes care of plumbing and all that kind of
Yes.
stuff. And the condo does the exterior.
Yes.
So, but the exterior has a lot of damage, but they have special assessment to cover
They can.
the exterior damage. Is there any way she can protect herself against that?
She needs to call her agent and get as much of that loss assessment coverage as they'll sell her. And they may not sell that much in an area with really, really high
So
losses.
it would be like her agent that has an interior.
Whoever has the condo.
That's a separate policy.
Yes, and there should be a master policy that's covering all the rest of that anyway.
Right.
But oftentimes they'll have really high deductibles and stuff because they don't want to pay it. They don't want to, charge that high of an HOA fee. Does that help?
Yeah, I don't.
If you forget, email me and I'll re-explain it. Okay, yes, sir.
Yeah, one other question.
Uh-huh.
Of all the revenue the State Farm receives in a typical year, what percentage do they pay out to policyholders for claims?
I don't know that. It's a good question, but I don't know because claims is not my side of the business. I'm sales. But, I would imagine a good part. We pay claims every single day and we pay a lot of them. And I always say if we owe it, we pay it promptly. Sometimes people think we should pay something that we do not owe, but yeah, if we owe it, we do. But I don't know the percentage, but I know it's watched very carefully, thankfully not by me, but, because we have to have enough money and we have to anticipate those huge losses. And the thing is, of course, you don't know where they're gonna hit or when they're gonna hit or how big they're gonna be, that sort of thing. But the thing that, what I always say to people, with State Farm, you never look at your policy and go, gosh, I wonder if I had a loss and they didn't have the money to pay it, what would happen? But that can happen, just not with us. We've never, if we go under, everybody else went first by a long shot. But, and again, I'm not in that end of the business, but it's a tightrope because, we don't want to overcharge, but we also don't want to undercharge. And, we're always kind of watching for that balance. Does that help? Oh, one thing I wanted to say too. Arizona is much friendlier to insurance companies. So like I said before, we have to file for a rate decrease or an increase or a discount. It doesn't kind of make sense to me, but that's the way it works. If we file for something, they will always give it to us because we don't gouge. If we need 2.6%, we file for 2.6%. We could file for 10. They never ask, but we don't gouge people that way. So, and being a mutual company, if we have extra money, like I said, we're State Farm. I don't know if you guys have seen it, but they recently declared a $5 billion with a B, dividend for our policyholders. So anybody who had State Farm car insurance and some life insurance policies last year will be getting a check they're estimating a little over $100 per vehicle. And they'll come out later in the summer or something, but do you know another company who's ever done that? Nope. Or took a rate decrease? No. Sometimes I think they should take a rate decrease. We should put that money back and just have it in case, but they don't ask me. Yes, sir.
What about act of God, like hail insurance or a massive hailstorm? When I lived in Oklahoma, I had hailstorm hit me twice in 5 years.
You were there 3 times, you were due, but yeah. So it's funny because I've had people ask me about like separate hail insurance and separate wildfire. Like I had one lady who was just incredulous and I said, it's a fire. We don't care if it's wild, tame, or happy, or doing a jig. It doesn't matter. It's fire, it's covered. And she's like, yeah, but I think we need a separate policy for wildfire. And I'm like, I'm happy to take your money, but seriously, no, that's not right. So your named perils on your homeowners, fire, windstorm, hail, all that kind of stuff is covered. Flood is not, so in case anybody needs to know that. And the thing to be careful about with flooding is when you have a wildfire, then you have the burn scar. You're familiar with that, where all the trees and the vegetation have been at. So now you've got a really good path when the monsoons come. You can just have flooding and like mud flows. I remember seeing, I wish I had it to pass out, but a picture of a house in Flagstaff, and it was like a mud island. It was this little house. It was a big swirl of mud all around it and mud everywhere. It was like a mud river. That is covered by flood insurance. It is not covered by home insurance. It's always been a separate. Did I answer your question? You have another one?
Farmers Insurance Group went out of business in Oklahoma, quit writing hail
It happens.
because their losses were so massive.
They're too small and they can't make it up. I mean, I have a client that I wrote recently. It was a home and 2 autos. The home, their other carrier, who shall remain nameless, went from $3,700 that last year to $9,000 this year with State Farm, with way better coverage and the endorsements that I talked about, $1,700. And then he's like, well, you can't beat Progressive's auto insurance. And I'm like, I'll bet you $100 I can. So when he sent me exactly what he had, it was $400 less a year for the coverage that he had. And we gave him better coverage. He's still saving a buck of money. But, it's funny because State Farm's never been, we've always been competitive, always, my whole career. Sometimes a little more, sometimes a little less, but you get the great service and the local people, all that jazz, right? I don't know what's going on. I mean, we never advertise cheap, but I'm just telling you, if you haven't looked at State Farm in the last couple of years, do yourself a favor because you're talking real money. And like for people who have to, they're buying a house, they've got to qualify for a mortgage. If you're saving a couple $100s a month, that makes a big difference in, what you can qualify and how easy it'll be to maintain that. Yes, sir.
It's kind of a frivolous
I
question.
promise you're not a plan.
Are you a worldwide insurance provider?
No. Is State Farm?
Yeah.
No. State Farm is in the United States. We're not Canada anymore because they're crazy too. Oh, I'm sorry. Didn't say it out loud. Regulations. The regulations make it hard. But yeah, we're in every state in the United States, but we don't write in other countries.
Would they cover any acts of terrorism in this country?
I don't believe so, and I don't know that any insurance company does. But, things happen and then we end up covering stuff that we probably didn't intend to begin with, so I don't know.
So
My feeling is if terrorists are coming, they're not bothering Sedona, Arizona, but that could just be a wishful thinking on my part.
Just on the dark side of humanity here.
Yes, sir.
So you cover everything: health insurance, life insurance, home and auto.
Some business insurance. We do Medicare supplement. Like if you have Medicare, we can do the supplements. We do not do major medical insurance. So if you're looking for something like that, State Farm has not done that for many, many years. But we do the Medicare supplement, we do disability, we do that kind of thing. Good question. Yes, ma'am. And you've been so quiet the whole time. No, go ahead.
Then if you're a skilled nursing situation, what is covered with normal insurance and how long?
Okay, so you mean health insurance or Medicare?
Well, pardon me?
Are you asking about regular health insurance or Medicare and a supplement?
Well, you said you have supplements.
We
so
do.
The supplements will not pay unless Medicare pays.
That's correct. We have to, so basically they tell us what to pay. We can't pay anything that Medicare doesn't authorize under a supplement. And I don't know that anybody can. It's pretty, Medicare supplements used to be like a mattress, right? You're looking for a mattress, you go to 4 different stores, they're not called the same thing. You don't know what right? It made it really hard. And, but then many years ago, the government said, no, it's got, a Plan G with us is the same coverage as a Plan G. Now we will cover the excess that if you go to Mayo Clinic and they charge you because, they're proud of themselves, and it should be.
We will not take the Advantage plans.
There's a lot of companies. I won't write the Advantage. I would take it myself. In a rural area, I don't think it's great, and that's just me. I don't have Medicare yet. I'm old enough to, but my husband still has great insurance, thank God. So we won't have to do that for a while, but yeah, there's a lot of, I mean, Medicare Advantage is more like an HMO. So if you live in a bigger area, Phoenix, Tucson, where there's a lot of doctors who won't take it, you won't have such a hard time. But the nice thing with the regular Medicare supplement is that it'll go anywhere in the country. You don't have to change it when you move. If you travel at all, which my husband and I do, there's even emergency coverage overseas. I mean, there's a lot of stuff there that you just can't get. The Advantage has some nice stuff. You know, it has like, you can get dental and vision and gym membership, that sort of thing. But like I said, I personally wouldn't buy it, but that doesn't mean nobody else should. Sometimes people are happy with it. It's just a little more like an HMO. And I have a client who, she called me about that one time a couple years ago. And her husband had bought this Medicare Advantage plan in January, and he had some kind of a heart issue, and he could not be seen until December. This is Canadian socialized medicine, honestly. They get to you when they get to you, and if you die in the meantime, oh, sorry. And she was so mad, like she just hated that, didn't want to have it. But then she didn't want to pay for a regular supplement. So I'm like, you know, you have to make a choice on what makes sense for you, basically. And if you have doctors who take it, great, but a lot of them will not.
No, I had relatives that lived in Florida, and they would go to New Hampshire, and when they had a problem in New Hampshire with an advantage program, it was not covered at all.
Yeah.
But my interest is that we've been looking at a lot of different places to retirement for stage-placed care, and some of them have skilled nursing, but they have said that Medicare will only pay for 100 days. Is that correct?
I don't know that off the top of my head, but I'm just going to tell you that with any kind of Medicare supplement, or Medicare tells us what to pay. It's not arbitrary to your insurance company. We don't get to pick what we're going to pay or what we're not going to pay. Medicare says we pay this and you pay that, and there's no debating or anything else. And there isn't anything else you can get that will pay something that I'm aware of that will pay something that's different than that.
Thank you.
Okay, they get the big cane out. Thank you, Carrie. Thanks, everybody.
Thank you, Karen. We appreciate your time, insight, experience, and hope you'll hang around for one-on-one questions. Okay? Thank you, folks. Next week.